and welcome to Cliff Kuehl's Notes. My name is Shruti Shekar. Today I have James Anderson here to talk to us a little bit about bullion investing as well as BitGold. He is the author for The Beginner's Guide to Bullion Investing as well as the former managing director for goldsilver.com. He is currently doing the social media content for JM Bullion. Hi James, how are you doing today?
Thanks for having me, Shruti.
So I want to delve right into the questions and I want to ask you, what exactly does JM Bullion do as a company, and what is your role at the company?
JM Bullion's been around since 2011. It's an online, high-volume retail bullion dealer of silver and gold. So basically, people who are interested in buying gold and silver and taking delivery of it discreetly to their door, if they just search, buy silver coins in Google, we'd be on the first page. We're one of the largest retailers in the country. And we've been doing a lot right the last 5 years since we've been around. It's basically we deliver a high volume of different types of products at great prices and fast to people's doors discreetly. So it's been in the bullion investing. When it comes to bullion investors, they want to make sure they get their products at a good price, and they want to get it quickly because it's not the most transparent of markets, and sometimes the different bullion dealers out there will play shenanigans with people's funds. There maybe will use their funds as opposed to their own to cover the operating expenses of their companies. So customers like to see their products get there fast, and that's what we've been doing for the last few years, and we've grown in market share because of it. And what I do with them is basically I've been working with them to help educate their customer base. And so, like, if you come to jmbullion.com, you'll get offered the free The Beginner's Guide to Bullion Investing, which I wrote and JM Bullion sponsored. It's like an 80-page digital guide of the fundamentals behind silver and gold investing, and like the nuances, meaning like how you would take delivery of the metals, how you might safely store the metals, how you can ship the metals within the United States 100% insured, how you can avoid counterfeit gold and silver products. So really stuff that you would only know if you had been investing in it for a long time. And if you were a beginner, it'd be really important information to learn because you could avoid some maybe very expensive mistakes. So basically, through JM Bullion, I've been helping educate the customer base through the guide as well through social media, keeping them in tune with what's going on with the markets.
So I would like to ask you if you could elaborate on how precious metals can help a portfolio survive a fiat money expansion.
Well, gold and silver, they're a little bit different than fiat currency. Fiat currency is basically, it's basically a unit of account that governments declare as money and mandate that taxes be paid in it. And those come and go. And they historically have come and gone always. They don't last for millennia, whereas gold and silver do. Gold and silver are what I would term as money because the most important characteristic I think of when I think of money is its value lasting over the long term and preserving itself over the long term. Whereas currencies don't. Currencies, when you look at, for instance, the US dollar, it's lost 97% of its purchasing power since the Federal Reserve came around about 102 years ago or so. And it continually does. In the short term, you can have dollar strength because it's getting stronger as compared to other fiat currencies like the euro, et cetera. But when you back it up and you look over a 10, 20, 30, 50-year span of time, all currencies, they lose value to money like gold and silver. It's just a fact.
So obviously paper metal is completely different than a physical bullion. Maybe you could elaborate a little bit on how this is different. What makes it completely different than holding something physical as a bullion?
So when you look at gold and silver investing in general, you'll see a lot of different hybrids or derivatives of gold and silver. There'll be things like ETFs out there, which are called exchange-traded funds, which are traded on stock exchanges. There's futures contracts. There are paper gold and silver accounts, especially a lot in Asia. You find that where people will have paper gold literally on the street. They'll say, I invest in gold, and then you ask them what kind of gold they have, and they say they have gold with HSBC, and you go and look at it, and it's just basically a paper gold count, which is all that is futures contracts. It's not real legitimate gold, because when you actually look at the exchanges where they trade these paper gold derivatives or paper silver derivatives, it's just a fraction. It's just a fraction reserve system. When you look at it, the true amount of gold or silver that are on these exchanges is pretty minimal. It's like for instance, on the COMEX. When you look at the COMEX exchange here in the United States, I think right now it's about every 100 ounces of paper gold that are traded, you'll have about 1 ounce of gold that's registered and deliverable. So it's 100 to 1 in leverage, and the price discovery mechanism is basically backwards. Currently, we're finding the price mainly through large trading houses and speculators who are using paper gold to find the price discovery of gold versus actual physical gold, which is something that we deliver to people's doors. And so we're kind of in a strange spot right now. If you look at the way that we find the value of gold, the way that we find the value of silver currently today on the spot price markets. But now with the Shanghai Gold Exchange and more gold trading moving toward the east, that may change and go more toward a physical trading mechanism that finds the price discovery. But for right now, it's mainly paper gold that finds it. But the big difference is, really in the end, the one thing you have to know with gold and silver, the one thing you can trust is yourself. And the best way to think of it is you should hold gold or silver if that's what you're interested in having exposure to, at least first. First of all, have it in your hand, discreetly hide it somewhere that you can get a hold of it, because it's the ultimate safe haven. You want to keep it close by. You don't want to have any intermediaries between you and your gold or silver, or the least amount possible. And the ones that you do allow to be in between physical gold and silver and you should be able to trust those people. And right now, the financial industry is running thin on trust. And just given what their actions are, what the actions have been in the last few decades, I would suggest that people buy the physical gold or silver bullion and take delivery of it first. And if they get to a point where they have too much and they are concerned about having too much under their house or their roof, there's other ways of having maybe a third party like a Brinks, companies that have been around for hundreds of years that have helped guard people's gold and silver. And, it's basically a good way to have gold and silver outside of the financial system and in private hands, which, sometimes it makes more sense when the financial system is not doing well to have some resources outside of the financial system to hedge yourself.
So with that being said, perhaps you can elaborate a little bit about how the supply and demand fundamentals might raise the prices of metal.
So right now, the fundamentals are very good for both gold and silver. But the issue is that the price discovery mechanism that we're currently seeing doesn't necessarily reflect how good the fundamentals are. In the beginner's guide to bullion investing, I discuss the fundamentals behind the drivers behind gold, physical gold, where it's going and why, and as well as physical silver, where it's going and why, and what the trends are. The trends really for the last 7 or 8 years have been that there are a lot of physical bullion buyers, a lot more every year, especially in silver. When you look at the retail market, how it stands, you have a good segment of the populace who learned the lesson of gold and silver in the 2008 financial crisis, and they know that really nothing has been fixed fundamentally, and they're not really believing the propaganda that they've been seeing that everything's getting better financially. They understand that if anything, things have gotten worse fundamentally, as far as the commercial banks have gotten larger, the derivatives have gotten bigger. We still, as far as a country, are in worse shape actually than we were in 2008, given the amount of debt and unfunded promises that we've made to future generations. So I think overall, when you look at the fundamental drivers, that in the short term, really it's hard to see, because the price of gold and silver have been hammered the last 4 years or so, given what happened since 2011. But the actual drivers long term are very good. You have Eastern countries of the world like China and India who are continually buying gold and physical gold, not paper gold. They're taking delivery of tonnage of gold. there's high speculation that China will become part of the SDR being at the end of this year, and it's basically IMF world money, which is like an old boys club. It's a central bank of central banks, and China will likely at the same time declare at some point a higher reserve of official gold than they have right now. I think right now they have about just over 1,000 tons, but they haven't made that. The last update they made was like in 2009, and there's a lot of speculation that when they do update their official reserves, it'll be around the same time that they get included in the SDR. And so, speculation would be that they would come up with 4,000 tons perhaps, or even larger amounts than what they currently state. So that would be a huge driver. As soon as China starts showing a little bit of their hand as far as how much gold they have, I would expect the third phase of the gold bull market to really kick in, and you'll start seeing the price go vertical. But in the short term, it's been hit hard because, like for instance, the dollar has gotten a lot stronger, and the inverse to gold is often how strong the dollar is. And in the last few months, it's definitely been stronger. The U.S. dollar, it's put downward pressure on gold.
So it's a payment system at the heart. It's free payments. Who doesn't like that? But it's using a form factor in gold that over time, if history repeats itself, and we're talking about 6,000 years of history here, should significantly and markedly empower your life.
Now, I understand that our viewers can, of course, go to the website as well as read your guide on how to safely purchase bullion. But maybe you could elaborate or quickly tell our viewers a little bit about how we could safely purchase bullion and do it in a secure and safe method.
Well, the safest way is with a trusted dealer, and probably I mentioned in the beginner's guide to bullion investing, a real safe way is to use a third-party review website. There's a third-party review website called golddealerreviews.com, and you can go there and see the latest reviews by people who bought from various gold and silver companies and what their experience has been. And each review that you see is usually the latest ones, so it's up-to-date stuff, and it's not bots that are curating it, because there's a lot of fake review sites out there. But this is a third-party review website that I trust. It's golddealerreviews.com, and you'll find our competition there, and that's no problem. I expect that we'll do better than our competition when it comes to price and delivery. So I hope people go and look at us and our reviews versus theirs and make the decision from there. But you have to be careful in this industry because it is mostly you're dealing with private companies. We're not regulated, and I'm not saying that's a bad thing. It's just buyer beware. You have to know who you're dealing with. And for instance, a couple of years ago, a company by the name of Tolving, basically it was a intermediary between the wholesale market and the retail market. They were trying to act like they were a wholesaler and selling gold and silver at a very, very low premiums, and they did a great job for like 10 years. They were doing everything as far as delivering fast at a great price, but then all of a sudden the owner, I think, got caught in a situation. Either he was speculating in the markets or there was just gross incompetence. But either way, he fell behind, and all of a sudden his customers weren't getting what they were ordering. And a year later, there's hundreds of customers who are out tens of thousands of dollars, and now they're in a court battle to try and recoup some of their money. Wow. It's just, if you just have one experience like that when you're ordering gold and silver, it could really hamper your entire investment. So you have to be careful and know who you're dealing with. And I would suggest that you do due diligence every time you place an order. Make sure that whoever you're doing the deal with, their latest reviews don't say anything about time delays of delivery or anything like that.
Now, I'm sure you've heard of BitGold and its emergence in the past few years. What are your thoughts on BitGold and gold-backed currency? What do you believe about it, and how do you feel about it?
So I actually signed up and was offered to go look at their stuff before they actually came out officially, and I haven't actually gone on their website and looked at it. But the idea of being able to have gold in a third-party vaulting facility and to use a debit or credit card, and pay with your BitGold credit card or debit card for goods and services, and they basically then obviously take some of your gold out of your BitGold account to settle the currency that you use for the buying of goods and services. I think it's a good thing, and the more options that people have to hedge against what could potentially happen to their currencies, the better. And I think right now they're only doing gold, but eventually they'll probably offer silver as well. And anyone who's in the retail business probably understands that silver is the one that people most demand right now over gold. And gold is the one most people recognize when they first come to the market. But silver is actually the one where the value is, and where people feel like they're getting more for their currency. So I wouldn't be surprised to see them come out with silver option as well for their customers.
So stepping away from BitGold just for a second, I wanted to know your opinion on the G20 bank bail-in plans that was just announced during the Financial Stability Board. What are your thoughts about it and your opinions?
Yeah, that happened, I think, in the end of 2014 in Australia, and the Financial Stability Board, which is basically like a mouthpiece for the Bank for International Settlements. They go to these large meetings with different financial elites, and they're basically trying to garner. They've set up an infrastructure, a legal infrastructure, where now in the G20 nations, and the United States is part of the G20. Now, if they have to in a crisis, they can do bail-ins with any of the major financial institutions or banks. And basically, what a bail-in is, they did a bail-in in Cyprus, and they're talking about potentially doing one in Greece. And I wouldn't be surprised to see something like that this summer in Greece and in other European countries as well. And it's basically the idea that if your bank goes under, you are, anytime you have currency in a bank, you're really just a creditor to the bank. It's your liability, and it's not theirs necessarily. If they go under, if you're with a large bank that goes under, your account could then become bailed in, which basically means you could lose a large percentage of what you have with them, and in exchange, you might get, they'll restructure the bank. And then they'll probably sell shares in it, and you'll get some new shares in the new bank as compensation for the cash that you lost. And that would be after years of legal fighting and such. So basically, what I'm concerned about when I see the G20 and the Financial Stability Board setting up bail-ins, it basically looks like they're setting up an infrastructure to do this globally and to consolidate further the losers in the derivative fiasco that we have currently. And there's all these derivatives, and it's a question of who's got the winning derivatives at the end of the day. And those who are in the banks with the losing derivatives could end up losing a lot of their savings. And it's just a shame that we're going to have to get to a point where people are going to have to relearn the fact that whatever bank you give your funds over to, you better know them very well, and you better make sure that they're very solvent and that they're not doing anything that's risky with your currency.
So I wanted to know your opinion about China and its aim towards having its currency be part of the IMF SDR currency, as well as gold and its role that it might play in the future of IMF SDR currency, or perhaps whatever aim that China has for its future currency.
Yeah, I believe with the SDR, it's probably going to be... it's probably going to come about after a crisis in the financial system where the SDR will be announced and be brought on as a solution. And typically these things happen when they change monetary systems. It's usually problem, reaction, solution. It's the standard modus operandi of the large powers that be. They typically will allow a crisis to occur, and then they'll have the blueprint ready as far as, here's the next thing that we're going to offer to quell this crisis. Mm-hmm. And it's already kind of being set up. If you look at if you look at various websites like the IMF's or the Official Monetary Institute of Financial Affairs, I believe it's called. It's a think tank in London. I watch their website often. They're basically running around Beijing and China right now, doing a bunch of meetings with, I'm sure, higher ups in China, discussing what the plans are for the yuan. It looks like what China wants to do here is to have the yuan become part of the old, white shoe boy club of the IMF, and it'll probably be, the U.S. dollar, the yuan, the British pound, the Japanese yen, and maybe a few other currencies. And they'll likely bring on gold as well to give it some. They'll claim it has gold backing, and they'll use the official reserves as some percentage of the backing, and in order to give it some sense of credibility. Because what's likely going to happen here is that we're going to have a currency crisis where people are going to stop trusting unbacked currencies, and so they're going to want to have some foundation to the different currencies of the nations. And what they'll use as the foundation will be gold reserves, official gold reserves of the countries. And official gold reserves. If you believe those numbers, I got a bridge to sell you. I don't know how anyone could ever believe any of those numbers because no one audits anything here, and it'd be really, really hard to ever do a trustworthy audit of any of these nations' official reserves. So in the end, I don't really trust governments. I'm not saying that the SDR is a solution. It's out of my power. It's out of most people's control. I'm just saying what the trend looks like. And when I read what's going on these websites and what the powers that be are doing and what they seem to be planning, it looks like there'll likely be a crisis in the banking system, which will call upon, nations to potentially come up with a new monetary system. And typically when you go from say like a full gold standard where you're literally using gold and silver coins day to day for transactions, all the way to a fiat standard. When you go back toward gold, you do it in small steps. And this will be, kind of inching toward going back toward gold. Whereas we'll still be using our currencies day to day, mostly in the digital form. But there will be a claim as to there being some gold tied to the value of these currencies that we use.
Lastly, I wanted to ask you, what are your price projections for gold, maybe in the next 3 to 5 years? And if that's too long of a time frame, maybe in the next year or two?
No, that's fine. Next, by 2020, I would think that this monetary system change is probably going to be underway and fully, implemented. In that change, there'll likely be a lot of driving up of the values of gold and silver. And what their fiat values will end up being totally is not as important to me as how much stuff it'll buy. So gold could be, $3,000, $4,000, $5,000, $10,000 if things get really crazy. But that's not as important really as how much stuff the dollars will buy. So it's not as, some people hold gold because they just want to hold it for the rest of their life. I think it's good to have gold always as a hedge, and depending on where we are in the financial cycles, depends on how much gold you want to have. I think currently it makes a lot of sense to have a solid allocation toward gold and silver, just given where we are fundamentally in the financial situation. And as the values drive up higher, it'll make sense to probably diversify out of gold and silver back into, likely at that point it'll be real estate, maybe in certain spots, or maybe stocks will be cheap then, but right now they're way too expensive. So there's got to be a lot of seesawing as far as values in terms of gold and silver driving up in value, and a lot of paper assets and real estate going down in value for me to start selling off my gold and silver. So as far as price projections and stuff like that, you start throwing that stuff out, you sound like a nutball. So the bottom line is that when you look at how much stuff there is out in the world, how much stuff we create versus how much gold and silver physically that's available for investors, when investors start running toward gold and silver because they don't trust anything else and they want to get out of the financial system, they're going to bid all the value of what gold and silver will buy versus how much stuff is out there much higher. And in that time, then it'll start to make sense to divest out of gold and silver and move back. But it'll be a very scary time too. It'll be very hard for some people to let go of that. But my suggestion is that you do let go of some of it, because that's where you're going to recoup, the most gains for the gold and silver that you've held for through the crisis.
Well, thank you so much, James, for being here on Cliff Keel's Notes and talking to us a little bit about what the importance of bullion is, as well as how it's important for our viewers to understand about gold investments and investing in gold. And BitGold. So I appreciate your knowledge and being here with us. Thank you very much. And we hope to talk to you really soon in the future.
Sure. Yeah, it was a pleasure. Thanks for having me.